Here we go again. The job market is back in focus. Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead in trading. And yeah, this next week we have the jobs market. We're going to be looking for the NFP number next Friday. But are we going to have a jobs number? We might have a U.S. government shutdown on Wednesday. So could there be something else that we need to look at? Absolutely. We're going to talk about all that and more. We're going to talk about some end of month flows, if the government's actually going to shut down or not. And I'm also make sure you guys stick around because we have a mega trader funding program sale. If you guys are new to the trader funding program, you've never done it before, this is your time. I'm going to talk about that a little bit later today. And I'm going to go through all these different currencies. I'm going to talk about everything that's happening this next week. We've got to dig into our currency market analysis pretty deep this week because I haven't updated the charts in 2 weeks. So I want to extend a special thank you to Ryan Littlestone, my colleague, for doing last week's week ahead video. If you guys liked what he did, make sure you tell him in the comments below. Make sure you give us a thumbs up and give Ryan a thumbs up for coming in and stepping in last weekend to do the week ahead video. I was traveling to my son's college, so I couldn't be here naturally. But thank you again, Ryan. So we got some updating with charts. So let's get to it. Let's get to all these charts that I think are going to be pretty much market moving this week, and really we got to go through the calendar, look at different different things that are happening throughout the week. You can follow along here. You can follow along from home, whatever you want to do. But I'm actually gonna get into the charts. I'm gonna talk about some of these currencies, and I'm gonna go through them individually because I think it's rather important what had happened over the course of the last couple of weeks. So let's start with the euro. So, following, this is what we wrote, what I drew 2 weeks ago. So if you don't believe me, go look at the week ahead video from 2 weeks ago. These charts I don't touch. I don't touch them till I get back here, except the dollar index, because the dollar index I use for the morning edge. I use a different subset of charts for those, and for the analysis. Like if you're reading ForexAnalytix, you're going to notice that the daily charts right here, they're the same morning edge charts that I use. If you're on this particular video, it's the week ahead charts. I use actually a different subset of charts, so I don't touch them until the next time we talk. So obviously the euro exploded higher, and we found a reversal right close to that 127% extension. We actually did a false breakout and reverse. Now, here's the thing about, I have to obviously do a little bit of work here, and because this is going to be a big chart or a chart that's really important going into this next week. If you take this low, let me get rid of this really quick. I want to get rid of that. Let's go from this low to this high. You'll notice that the 618 retracement comes in at 1595. I believe that this is going to be major, and let me delete that. Let me delete this. This is going to be very, very critical support on dips. So if we get a dip down to this level, I think that is where, if you want to be on the long side of the euro, I think that is the place to do it. All right. One of the reasons why I believe we're going to eventually get there is that when you have a false breakout, if you guys know me pretty well, you know exactly what I'm going to say. When you got a false breakout, there's a really good chance of a breakdown. False breakouts lead to breakdowns more times than not. Now, does that mean we're going to go straight down from here? No, obviously we're actually bouncing today. Today we're enjoying a nice little healthy bounce after a extreme, really bad sell-off the last couple of days. So do I think there's further downside? Yes. Do I think that this is going to be a tradable level? Yeah, I do. I actually think you could probably do this and then back down here. I think there's a lot of different ways to navigate this market. But I believe that next week we should see a bounce somewhere around that 116 level. So if we get there, that's what I'm going to be looking for. All right, so that was the euro. Again, I got to update these charts. Sterling. Wow, so Sterling gave us, what did Sterling give us? it gave us a false breakout. It actually broke out, but we couldn't make higher highs. So now the problem with this chart is something that looks like this. Is now we're probably going to be making lower highs, which would probably coincide with lower lows somehow. And if you look at this long-term trend line, it probably is going to be somewhere down here. Now, obviously, we're not going to get down there in one fell swoop. Actually, what I think is going to happen is you're going to see a little bit of buying, like you're going to see some buying in the euro. You're going to probably see some buying also in sterling. Now, here's the problem, though. If we break through the lows from this week, that's going to be problematic, and that's going to usher in further lows, probably down through here. So keep your eye on sterling. That support comes in at 133.25, 133.25. All right, let's take a look at the Aussie. The Aussie is on our radar this week. Why? Well, if you excuse me, if you look at everything that's happening this next week, one of the first things that's happening at the beginning of the week is going to be the RBA rate decision. Now, we got a squeeze. We got our squeeze. It didn't last quite as far as I thought we'd go. Why? Because the dollar turned around. But notice where we're at. Now, I'm going to delete a few things. I'm going to delete a few things because it's a little messy. All right, let's get rid of this. Let's get rid of this, and let's get rid of that. Okay, so you can zoom out and say, okay, Blake, that's that big major trend line that comes all the way down from 2013. We're basically backtesting it today. This is Friday, by the way. I'm filming on Friday. Today is Friday the 26th. All right. The market's still open, obviously. But I still think there might be a little bit more downside here in the Aussie. So let me just zoom in for you. Okay, and let's do this. Let's do that. And let's do this and that. I believe it's Let me make sure I got all my lines correct here. Actually, I don't. Let's copy that. Go like this. There we go. That's how I think we should be looking at it. Now, you'll notice that this lower trend line, aside from, this actually goes all the way back. That's right. Forgot what I was doing there for a second. There we go. There we go. Now I know what I'm doing. Okay. Again, if you go to my normal charts and by the way, if you guys want to see what I'm doing every single day, all you have to do is go over to, all you have to do is go to the free F.A.C.E show. Do you guys know how to get to the F.A.C.E show? It's free every day. If you want my analysis on a daily basis for free, just go to our website. You can obviously be a subscriber of our website, and you can go to the Aussie dollar right here, right? Go to the Aussie dollar right there, and you're going to get my analysis. You'll know exactly what I'm thinking. Or you just go to our website and you go to our free show, which is over here on webinars. And this is our F.A.C.E show. There's the Flow show. That's the European show every day. And then here's the F.A.C.E show. You can register right here. Okay. So now, once again, what I was just saying with the Aussie, that's what I'm looking at right now. So let's go over to the week ahead and make sure that I have the same lines drawn. I do. But you probably missed what I was just trying to show you. Well, I will show you right now. If you go from this low to this high, right? You'll see we stopped at a 618 retracement. That is where we bounced from today. And we got a nice healthy bounce from there, by the way. But what I'll be looking at from here is, let me do the work for you. So this is basically a flag pattern, right? The completion of that flag pattern is a little bit lower than we're at right now. So that should take us close to this channel support. That is ultimately where I think we're going. And let me just go ahead and draw that out for you. Maybe as early as next week. So it's something just to be keeping in mind. All right, Kiwi. We're at a long-term 618 retracement. Now, the Kiwi's been exceptionally weak, but it's not just a long-term, it's a 161% extension, but it's also a long-term 618 retracement. Let me put these in a different setup for you. Okay. You can see this 161% extension, the 618 retracement that comes in right around 57.30. these are the levels that I think might be a decent place to be on the long side. Now, I'm less optimistic about New Zealand's economy, but that doesn't mean we can't see a bounce. And maybe it's dollar related. Dollar Canadian. We do not have Canadian jobs this week. It's going to be the following week, but the dollar Canadian is definitely in play. If you guys listen to my normal analysis with the on the daily F.A.C.E show, you probably are very well aware. I'm very much a Canadian bear as far as the currency goes. Love Canada, but as far as the currency goes, I'm quite bearish. But what you're going to notice is this is actually a long-term. Let me draw it out for you. This is a long-term inverted head and shoulder pattern, a complex one. You'll see here's your shoulder, your head somewhere down here, shoulder, and we are breaking through the neckline. So really, what has me pretty bullish is not only is this maybe a triangle that we're breaking out of. Let's get rid of this lower trend line, that one here, and let's get rid of this. Not only are we breaking out of this triangle pattern, but it also could be an inverted head and shoulder pattern. And if it is, the indication of that, of how far we could go, would be somewhere in the neighborhood that looks like this. And then if you take a fib from this high, whoops. You take a fib from this high to this low, you'll see that takes us out to the 618 retracement. Are we going to go there tomorrow? No, but is that an eventual target for the dollar Canadian? Yeah, and I know you're probably thinking that is a big move. I mean, it is a big move to go from basically 140 to 143. But in all actuality, it's not. I mean, if you think about like the range that we're in, 148 to 135, to have a 300 pip move from here, it's not super far, and it would not be uncalled for. And it's not like it's traveling to places that it hasn't been. So keep that in mind with the dollar CAD. Now, there's a couple other currencies that I want to go over. I do want to go over the dollar Mexican peso, but I'm going to do that during the review. Because I'm going to review the three trade setups from 2 weeks ago, but I'm going to give you three, actually plus one. So I got 4 trades that I'm going to give you at the end of this video, and then we'll review them next week because I'll be here next week. So make sure you all stick around for that. That is at the very end of the video. So I'm going to go back. I'll go back through the dollar mex, but I do want to cover the dollar yen. The dollar yen, I have not had a good. And I've been very clear on saying this. I don't have a very good feeling on what I should be doing with the dollar yen. I can't tell if it's a yield move. I can't tell if it's a yen move. I can't tell if it's a risk move. But what you're going to notice is we are starting to come into some pretty critical resistance here. Now, we've broken this minor range, but the upper end of the range is about 151. So again, I'm not super excited about the dollar yen at this stage, but it is looking more constructive for the bullish argument. And that's something that we should be paying attention to. All right. Now, this is the point in the video that I'm actually going to talk about different markets too. I want to talk about what's happening in the S&P. I definitely want to talk about what's happening in gold and the bond market. And actually, we should probably even talk a little bit about what's happening in copper as well. But before I do that, I'm going to bring in Nick from Trading Analytix. He's got his short video. He's going to cover the Mag 7. He'll end up covering the S&P, giving you his view of the S&P. So make sure you stick around for that. And I'm going to pass it to Nick right now. So enjoy your time with Nick, and I'll be back and I'll give you my own views of the S&P.
Hello everybody, my name is Nick Groves with Trading Analytix. Blake, thank you as always for passing on over to me. And we do have a good amount to cover today after we saw some equity weakness for the first time in a while this week. What does it mean and what could be coming for October as we gear up for that? That's what we're going to be talking about. So I do have a few things to bring to your guys' attention. One thing that I found quite interesting was this stat on AI. It says AI is running the market via JPM's Michael Sembelist. Sorry. Um, since 2022, AI stocks have been covering about 75% of the S&P 500 returns, noticing 80% of earnings growth, 90% of capex growth. Data centers are now outspending office builds. And I find this really interesting. And one thing that I would like to bring up is just because there's a lot of spending in AI doesn't necessarily mean it's going to come to fruition for each investor parking their money there. I do feel as if we do have very similar price action to the late 90s. And I'd also point out that in that time period, there's a lot of infrastructure spent on the internet that we don't even use today. So keep that in mind. And the other thing that I'd like to talk about is, yeah, we're in the fall, right? And historically, September, October, November usually offer weakness. And on average, that's about 5 to 8% of a pullback. Now, we didn't see a pullback in September. We didn't see one over the summer either. I showed you guys this stat last week on the S&P 500. After a 5% summer, what you'll notice is that the win ratio for October is pretty grim. September, it was up in the air, but we had a good September. Okay, now we're gearing up. I also found another statistic that kind of runs congruent with this. The S&P 500, when September is positive, and every day of June to September traded above the 100-day moving average, meaning there wasn't a pullback yet. The average return in October is a 0.5% negative, the median 1.14%. And it's only positive 40% of the time. So I guess what I'm getting at here is there is potential for weakness going into October. And what does that look like? Well, I'm going to zoom in here on my chart on the Nasdaq. Tech is definitely what I typically have my eye on. And what I would say is we saw a bear flag play out, and you could probably argue another bear flag play out. So we've seen some weakness. And in total, we've seen about a 2.4% drop, which is pretty standard. Okay, now the question is, are we going to continue to rally from here, or are we going to begin our pullback? What I would point out is that we didn't even tag the 38.2 in the NASDAQ. That comes in at 24,260. So that's going to be really the first line of support. To the upside, you can see we're fighting some resistance here at right around 24,720 or so. And I would say to the upside in the NASDAQ, I'd be looking for a hold of probably the 618. You're going to want to see this, definitely the 786. That's kind of your last line of defense at 24. Call it 24,900. Now, unlike the NASDAQ, the S&P did actually tag its 38.2, which if you're a bear, that should concern you a little bit. This can continue to march on, and as much as I'd like to say, hey, you know, we're going to be shooting lower, this market has been relentless, and when we shoot lower is the big question. You know, we could continue to rally from here. I do still have the S&P in this ascending channel here. If I were looking to be short or looking for confirmation of more weakness, I'd be looking for this 50% to break around 65.40 or so. You know, if we're going to get that sort of fall pullback, you know, 5% would take us down near 63.50, and a full-on 8% correction would actually allow us to back test the breakout of all-time highs, which is what I've been really wanting to see. Now, just because you know, we could get some weakness doesn't mean that I think that we're going to simply roll over entirely. I'm not sure if this shows November. Yeah, it does. The rest of the year, even after a pullback in Q4, based on the, you know, time frames that we've been tracking, suggests that the rest of the year should be quite positive. So what I'm looking for is a dip in October to hopefully get long. And I would love to get long at a back test of all-time highs if we got that, if that was given to us. Other areas of the market are certainly suggesting it. You have the dollar rallying the last week. Rates have been going up. So I do feel as if there's risk for the equities to catch up. But we've had some blockbuster moves in the Mag 7s. Taking a look at Apple. Apple has been screaming higher. And, you know, we've been talking a lot about, hey, where Apple goes, the market's likely to go. You can see it stalling out near the former all-time high, and I just want to point out the gravity of late. You know, it's from August 11th to September, we've had about a 30% gain in Apple, which is not common. What I will point out, though, and I just noticed this today, from a weekly perspective, there might be a shot for some form of divergent RSI. So if we do end up getting another all-time high here, that would actually be, I guess, a 4 drive. You'd want to see it stall out right around 71 or so in the RSI, but that might offer some form of confirmation for some people to get long. Another stock, though, because I will say this is kind of a mixed bag. You've had Apple and Google really ripping, but you have Microsoft still stalling out. Meta looks almost like, let me get to a 2 hour, looks almost somewhat like a double top. When you take a look at the mags themselves, what you'll notice is that there was a bearish engulfing on the daily that was quite significant here. You can see that nice engulfing candle. I'm always watching this chart. I'd like to see the trend line of this ascending channel broken around $62. That would give confirmation of a larger pullback, something that we could probably say, hey, maybe we do back test the breakout to all-time highs. And, Microsoft, this is what I mean by it's a mixed bag. This one cannot get off the floor, but we already had that euphoric pop in Microsoft. We saw around earnings, after this thing was just relentlessly rallying, a 5% move, only to close negative on the day, and now it still can't get back above the 38.2. So this is a really tricky market. If you're looking for more analysis like this, give us a follow on Trading Analytics, and I'm going to go ahead and pass it on back to Blake. Thank you so much. Have a great weekend. Cheers.
Thanks, Nick. I appreciate your outlook. I will be watching it a little bit later this evening because he's filming it at the same time as me. So, Nick, thank you very much. All right, let's go into a couple of markets I said I wanted to cover. I do want to cover the S&P because the S&P, we talked about it having a reversal up at channel resistance post FOMC. Well, post FOMC, we actually rallied a little bit further. I want to thank NVIDIA for that nice little goose higher in the markets, but you can see we're still challenging, some pretty key resistance here in the S&P. I think it's a channel. I think it's we're trying to develop wave 5. I don't know how far it's going to go, but somewhere up in this neighborhood, I think is pretty critical support now, or pretty critical resistance. I do believe channel support is coming up. But that doesn't come up until about 6,500 by the time we get there. Now, if you zoom in, let's go over to a 4-hour chart. The one thing I do want to point out about the S&P is the pullback has been very shallow, right? You can see how we've only retraced to a 38% retracement. So because it's such a shallow retracement and because we're still making higher lows, you can't be bearish equities. I am short right now, but that doesn't mean that my bias is bearish or the chart is biased as bearish. No, it's actually quite bullish. It still is bullish, even though I'm thinking more longer term and I think we're going to turn up here for a wave 5. It doesn't mean that we can't bounce around still at these levels. We really have to take out this channel support or the 50 DMA. Do you see that the 50 DMA, which is this yellow trend or moving average, that comes in at channel support. So we have to break through that to turn bearish. However, there are a few charts that actually look a little scarier. And if you look at the Nasdaq100, if we break back into this channel, that's not going to be a good sign. And if you look at the Dow has this ascending wedge. And matter of fact, I think I'm going to redraw this and show you that we are really just pivoting off of wedge support in the Dow. But the Dow itself and the Nasdaq and the S&P, they all still look bullish, but you can see those signs, the signs of weakness are starting to seep in. Now, I also wanted to cover a couple other markets. I obviously have to cover gold, and I got to cover silver. So gold, last 2 weeks, 2 weeks ago, we talked about a pennant and how it should complete right here. And we hit that almost to a T, and we're at 161% extension. Now, it's Friday. People are a little bit worried about what's happening in Russia, Ukraine, Europe's involvement, US's involvement. Yes, it is. Gold is higher today, but I still am looking at it and I'm very nervous because we make new highs as relative strength, you'll notice, is divergent. That doesn't mean it will stop gold, but if you are on the short side of gold or you're bearish gold or you're just hoping for a pullback in gold, these are signs that you'd want or that are appearing that do suggest that the market's getting very nervous up at these levels. You're making higher highs and you're completing chart patterns with divergent strength, and that's got to be noted. All right, but look at silver. Silver is exploding. We obviously haven't talked about this chart in a while. Oh boy, these are things that I put on years, probably like last year or something. Let me go ahead and get rid of them. But look at silver. We're approaching now. Let's go over to a weekly chart. We're approaching major resistance. Matter of fact, let's go SI, silver futures. Look at longer term silver futures. You want to talk about some big resistance up here? Huge resistance up at these levels. You know, this is a Hunt Brother time frame. I mean, you know, you can see we're in some big levels of resistance. Do I think that silver is eventually going higher? I do, actually. Would I be chasing it up here? It's a little scary. It is a little scary. That's something we should be taking note of. That doesn't make me bearish right now, no. But very extended RSI. Matter of fact, the last time we were at these levels with relative strength, well, actually we went a little bit higher. You can see back here in 2020, that'd be post-COVID. That was post-COVID lockdown. We're getting close to those levels, and we have been slightly higher before back over here. So you can see relative strength is obviously very overbought, but we can become more overbought and be at levels that we've seen in the past. So obviously relative strength is very overbought. Do you chase it up here? I mean, it's dangerous. You can try. I wouldn't want to be selling it. But if I was buying it, I would just be moving up my stops. Another thing I do want to talk about is I want to talk about crypto. If you haven't seen Ethereum is back below 480. That's that breakout point from right there. That would make me a little nervous, just with risk in general. Ethereum has come down. We've bounced. We're kind of holding around these levels. Bitcoin, I don't know which chart I'm using. Bitcoin, I guess it's this one here. Bitcoin, as you can see, we bounced back then when we talked about it. I guess it did. Haven't looked at it in a couple weeks. But I would be really nervous if we broke through this 107.4 level. Now, you would know that level because we talk about it on a daily basis. I do this analysis with our traders privately every single day. So if you want to get involved with the ForexAnalytix community, be in the shows that I do privately for our traders, I build out this T-chart that you see right here. Okay, you see it right there. I build out that T-chart every single day with our traders. And, key support right now is 107.4. Now, we're getting close to that. We're just less than $3,000 away from there. We get through that level, that's going to be a fairly bearish event for Bitcoin. Now, remember, you can also always take a trial of ForexAnalytix. It's $1 for 10 days. $1 for 10 days. Try it out. Come jump in the chat room. Come jump in the chat room. Jump on the private shows and jump in our. This is our chat room. You want to have a conversation with me, and you can ask, do you think dollar Canadian being short at this level? And I can show you that chart and say you have to be very careful. You want to have those conversations with somebody like me or other analysts in the ForexAnalytix community. You can do that. I mean, look, we could see that. I'm having conversations with K-Man there. Let's see, Michael Brown from Pepperstone. People were chatting with Michael. Oh, just saying, have a nice weekend. But you can see we have other conversations about labor statistics. Oh yeah, we have those conversations too. And you can have them with K-Man, Lucas, any one of our traders in our community. We have a lot of wonderful traders in this community that are constantly posting. So if you want to be part of this one of the most active communities in the markets, do it right here and try out ForexAnalytix. All right. So one of the other things that I wanted to cover before we go into our top 3 trade setups of the week, plus one, because I'm going to give you a bonus, and we're going to review the other 4, is I do want to talk and just show you really quick volatility. Volatility is still very, very low. All right. But people are starting to talk that volatility could really break out. And I'll tell you, when volatility breaks this red trend line, that's when I'm going to be like, okay, game on. That means things are going to get really active. But how do you prepare for that? Well, you prepare through the trader funding program. So if you want to know how to get funded as a trader, because you have two options when you get funded. You can get funded instantaneously. That means you want more capital right now. You can go to immediate funding accounts, or if you want to go the more economical approach, you can do the one-step assessment. So stick around for 1 minute, listen to the sales that we have going on for the trader funding program, and I'll catch you in just a minute. Have you wanted to get funded as a trader? You've been curious about it, but you haven't tried it yet? Well, Trader Funding Program has a sale up until September 30th. If you're a new customer and you've never been funded as a trader, you get 50% off all $5,000, $10,000, and $25,000 packages that we have for funding, whether you're talking about instant funding or one-step assessments. 50% off until September 30th. Now, if you're an existing funded trader, you've tried it before, or maybe you wanted to get funded on a separate account, don't worry, you get 30% off any account that we offer, whether it's one-step assessment or instant funding, up until September 30th. The two discount codes are simple. If you're new and you're new to Trader Funding Program, it's NEW 50. That's new 50. And if you're a pre-existing Trader Funding Program trader, and like I said, you want to try it again, or you want to get another account to trade, another funded account, your discount code is FALL30, F-A-L-L 30. So make sure you take advantage of these offers. If you've never been involved in the Trader Funding Program, it's a great way for you to get funded, but also have access to ForexAnalytix and the ForexAnalytix community, so you can talk to analysts like myself and the rest of our team all throughout the day. It's a great way to get started. So make sure you take advantage of it till September 30th, new 50, NEW 50 if you're brand new, and fall 30 if you're already a pre-existing funded trader. All right, I'll see you in the community. All right, traders, welcome back. This is the point I'm actually going to talk about the trade setups from 2 weeks ago. Now, remember, I'm not talking about last week because Ryan Littlestone was here. He was giving you his setups, but I'm going to review mine. All right, from 2 weeks ago. So the first setup was long pound dollar above 136, target 75 pips higher. So this, I actually took this trade. We broke above 136. We went to 137.70. 136. We went as high as 137.26. 137.26. And I got out of it. I took my 70 pips. I got out of it through. Actually, I didn't make it completely. I got out right here at 60 something. You'd have to go back, by the way, if you want to know what trades I'm in, you just go over here to the ForexAnalytix community. You go to the trades room, you can see exactly what I'm doing. I'm 90% sure I got out on this move. I didn't catch this spike because that spike was for the FOMC. So I got out ahead of time. But dang, that worked pretty well, right? Long pound dollar above 136, target 75 pips higher. That worked. Trade number one worked. Trade number two, long dollar Mexican peso at 18.22. I got long dollar mex at 18.22, and I'm still long dollar mex. I've gotten in and out of some, but now I'm gonna dive a little deeper into this dollar Mexican peso. All right. Okay, let's go ahead and delete a few things. And now, if you're really looking at what I'm doing, you'll notice that we had a false breakout here, led to a breakdown, which it did. Which it did. Right? Then we got a reversal from the key Fibonacci level. And now This false breakdown, let me just show you. This false breakdown is going to lead to a what? Eventually, it should lead to a breakout. So what am I looking for the dollar Mexican peso? I'm still looking for higher. So if you're long, I actually got long. When I got long at 1824 originally, 18.24, which was on the spike right here. Where did you guys get long? Did you get long at 1822? Well, if you did, congratulations. Trade number 2, that worked out fabulously. Trade number 3, short S&P sometime Wednesday post FOMC. Well, I already let the cat out of the bag. I am still short. So this is FOMC. I got short near the highs of the session. Obviously, you could have made money. You could be in the trade. I'm still short. I'm actually looking for lower levels, longer term. Seasonally, I'm playing this to the downside, but from then until now, I mean, you know, if you're negative, you're negative. If you're still in the trade, you're still in the trade. However you want to count this one, I'm still in it, so I'm staying short. And by the way, if you guys can't see it, I'll draw it for you. All right. If I had to give you my imagination, that's what I'm looking at right now. That's obviously our ForexAnalytix alerts going off right now. So one of the things about the S&P is I still think it's going to go down. So you guys can count it however you want. You can say 2 trades worked, 1 didn't. You could say 2 trades worked, 1 you're still in it. You could say 2 trades worked and I made money, so 3 trades worked. However you want to count it, but not a bad bunch of setups from 2 weeks ago. So what are the 3 plus 1 trade setups for this week? First one, I want to buy the euro at 115.95. I already told it to you guys that I'm looking to do. So if the euro reaches 115.95, I am looking to get long. So I'm looking for a move like this, boom, and then looking for a bounce. I'll be selling it too. I think the euro's carved out a high for now, but that doesn't mean we can't trade both sides of it. So trade setup number 1, buying the euro next week if we see 115.95. Trade setup number 2, I'm going to get long Aussie dollar at the 65 cent level once this flag has completed. All right, we're near channel support and this long-term trend line. I mean, this long-term trend line, just keep in mind, this is a weekly trend line. For you to be on either side of that trend line by 100 pips, that means you're still supported by it. So a little dip below it, it doesn't bother me. So if we get in the Aussie dollar, if we get to 65 cents and we finish this completion, finish the flag pattern, and it's near this channel, I'm going to get long. So that's what I'm looking to do for trade setup number 2. Trade setup number 3, long euro sterling at 87 pence. Now, we talked about this a couple of weeks ago. We talked about this being a triangle and us buying it down here. I went long. Some of you probably went long as well. I didn't make as much as I wanted because I got out of it before I went on my trip. So I bought it here. I sold it up here. And obviously, I'm kicking myself in the ass for not being in it right now. But that doesn't mean that I won't get back in. I'm actually looking to get back in on a dip to 87 pence. So hopefully we reach down there because I think eventually we are breaking out in the euro sterling. I think the euro sterling is in a long-term range. So we're going to break the upper end of that minor range and make it towards the upper end of this range. It's a great setup, especially if this breakout's going to happen. So that's trade setup number 3. So what's the 4th and bonus setup? Well, before I get into that 4th and bonus setup, let me just say, if you guys appreciate these videos, you think they're instrumental for you getting ready for next week, make sure you give me a thumbs up, give the team a thumbs up. Comment down below if I missed something, like I forgot to talk about Swiss CPI that's happening this next week. Yes, I already know. I forgot, but I'm running out of time. We have Swiss CPI. If there's something that I might have missed, like yes, yes, is the government going to shut down? We should probably talk about that. Actually, let's talk about it right now. Will the government shut down? There's a good chance. There's a good chance. Should it affect markets? Not really. You talk to me in 2 weeks from now. In 2 weeks, if the government is still shutting down, the markets will start to get a little nervous. But the problem is that we might have the jobs report might be delayed. So therefore, if we think that the government's going to shut down, we have to start focusing on data like the weekly jobless claims, the ADP data, which is private data. The ISM, I believe, is still going to be released. So the services, employment part of the services data on Friday might be really important. So those are things that we need to be thinking about during this government shutdown at this point, if we shut down, and I think there is a high probability of it. Okay, did I forget talk about anything else? I don't know, maybe not. So with that being said, if you like these videos, give me a thumbs up, subscribe to the channel so you don't miss any of these, comment down below if there's anything I missed, and now let me give you that bonus trade setup. The last trade setup is I am looking to short the Dow on a breakdown below this wedge. Now, if you listen to the trade-off show that I do with my colleague Chris Weston, late in the week for me. If you listen to that show, you kind of already know this setup, but I think the Dow, this false breakout right here, is going to lead to an eventual breakdown. So I am looking to be on the short side on a breakdown below that ascending wedge. And then obviously you have major support right here that's going to have to be tended with if we do start to see a breakdown. Anyway, guys and gals, I hope you enjoyed this week's video. It's nice to be back with you. I want to thank you so much for all of your support, being in our community, chatting with me down below, chatting with me in the chat rooms. I just want to thank you all. So have a great weekend. I hope you enjoy. And next week is going to be a crazy one as we're dealing with the jobs report, possible shutdown, and everything else. All right, I'll look forward to seeing you on the F.A.C.E show on Monday. Have a great remainder of your weekend, and thank you so much for spending your time with me. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.